So CoreWeave reported second quarter revenue came in at $1.2 billion, increasing 207% year over year. I'm following close to 300 companies, and very few of them increased revenue by 207% year over year, and fewer still at this size. It's easier to grow revenue by 207% when you're generating a few $100,000 in revenue or even a few million in revenue. Very difficult to generate this kind of revenue growth when you're generating revenue in the hundreds of millions and now in the billions of dollars, as CoreWeave just did. Furthermore, their revenue backlog is expected to scale rapidly over time. It was already at $30 billion, which was up 86% year over year, and the management team saying that it's expected to grow rapidly over time. Man, that's great news for CoreWeave stock investors. The manager said that with the strong demand backdrop, we expect third quarter revenue in a $1.26 billion to $1.3 billion range. In addition, we anticipate Q3 adjusted operating income at about $175 million at the midpoint. So the company's revenue is soaring and they're profitable on an adjusted operating income basis, but they keep investing for growth. They're investing significantly for growth. So they're not even focused on profitability. They just happen to be profitable because they have so much in sales, and sales are booming so significantly that they're generating profitability. But as they ramp up these investments, I wouldn't be surprised if there is some fluctuation in profitability, especially starting Q1 and Q2 next year in fiscal year 2026, because that's going to include those massive investments in capital expenditure, which are going to flow through to depreciation expenses on the income statement, and that's going to decrease profitability on a non-adjusted basis. If you just look at their GAAP operating income, the depreciation expense is likely to soar starting next year. So they expect capital expenditures to increase again in the third quarter to around $3.2 billion. And then in the fourth quarter, they expect it to really increase because for the full year, they're planning to spend over $20 billion in capital expenditure. So far, the year has gone so well that they're increasing their revenue outlook. They now expect revenue of about $5.25 billion at the midpoint. That was up from $5 billion from their previous expectation for 2025. So a $250 million increase in their revenue outlook for 2025 is mostly because of their ability to ramp up infrastructure to meet their soaring demand.
Click the link below to watch the full video.